Hey, Senor Ortiz, we are live. Are you ready to do this, brother?
Yeah, let's do this.
Let's do it.
Welcome to the Administrators Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Hey, KTTV. This is KT, and I'm coming at you live with another episode of the Administrators Podcast. I am KT, and this is
Joe, baby. What's going on, everybody?
Hey, look, man, brother, make a little money. Now he want to come in all suave on us tonight. He say, Joe, baby. Big shouts out. Before we even start the podcast, we want to bring out the Tesla chimes today, because if you were alive and you did anything to make some money with your life, then you were peeping out that Tesla today, man. Man, how you doing, brother? What's going on? How's work? What's happening since last Monday, man?
Man, it's been busy at work, man. We're getting to that crunch time, 19, 18, whatever it is, days left. Trying to get through all this end of year stuff, So it's nice to know that sometimes when you follow your own advice in the stock market, things can pay off.
Things can pay off. Look, man, I agree with that, though, man. I got one teacher, man. Every time I see him, dude, he may not even speak to me, man. He just said 19 days. And he just kept walking past me, bro. I was like, dang, man, I don't think they understand that I don't have 19 days, bro. But that's okay, though, because what's 19 plus? We got 23. Woo! Hey, man, what you gonna do? You got any plans for the summertime? You already booked some trips?
Well, man, hopefully I'm going to be learning how to be a principal. We'll see.
Hey, look.
But yeah, we got a trip booked to Vegas, and
okay.
I'm going to take my mom down to Coshada, and so we're going to Vegas in June. I bought tickets to a soccer game, Brazil, so I'm excited about that. So,
come on, man, it's going down, man. Well, you know me, man. I got my annual for Denver, so we're gonna get ready to do that, man. Go spend a little mountain time. That's why I'm getting the beard ready. So mountain man life. And after that, brother, probably just chill, man. I want to go out the country a little bit, but we're gonna do something, man, because we cannot be on here talking about making all these profits and we ain't having fun with it, brother. What we doing, man? We just take them. We wouldn't keep them to look at them. No, sir. Except for the tax money. That's a different story. All right, so tonight, y'all, we do have a great show for you. So much happened in the market today. So for the news, we got a little Tesla. We'll talk about that. If you were watching the news, watching anything in life, Tesla went crazy today. So we'll talk about why. And we'll talk about kind of what's next for Tesla. We also have Apple earnings coming up. So we'll talk about that in our platform probing. What are some of the things that we should look for earnings? Some of those never do's in earnings. So we're looking forward to talking about that. And lastly, y'all know we got trading with Jose. So he got the candlesticks. What are we looking at today, bro?
Today we're looking at one more bearish candle before we start looking at patterns next week.
So look, we always say that the money is inside of the candlesticks. So if you know what you're looking at, I had a friend, she said, it's like sports betting. I said, no, it ain't. No, it ain't. Because if that horse is tired that day, it's a wrap. But them candles is going to be them candles, man. So, hey, man, I'm looking forward to it. I think let's get this thing jumping with a little bit of news. Let's go. Let's talk about this. Wait a minute. Y'all know I got to clean this screen up for everybody. So let me do a little clean up here. All right. Now, this is what we got today. Tesla, man, Jose, let's add a little backdrop to this, man. You want to talk about yours first, or you want me to go first?
Well, let's talk about what happened last week and how we both came on and said that Tesla had been getting beat up Um,
Yeah.
we were sitting at halfway down on the stock over the past month and a half, beat up every single day. And we talked about how Tesla had earnings coming up last week and how the market was in the fear area. So all of that played together. And we kind of like gave you a little bit of a warning, so to speak, that if Tesla and Microsoft both were able to come through with earnings last week, then we were going to see a jump in the market. Well, Wednesday, Thursday, Friday, we had that. Now, if you looked at the fundamentals of the Tesla chart, we had kept saying that you're down $200 from your high, and your RSI and your MACD lines are ready for a takeoff. And we kind of talked about it's all about those earnings. And in fact, the earnings weren't that great, but the Tesla stock took off. And
Yeah.
so we didn't hit, 10%, not quite um, off the bounce from the earnings, but we did make a good jump from where we were, and a little bit of a pullback on Friday. Microsoft also went up, but it carried the market, so that led into the weekend, which led into today. And there were,
Led into.
and as KT will go into this article,
Woo!
if y'all follow the podcast, y'all know that we were real deep with some Tesla calls. We had rode
Heavily.
calls that were expiring in June. We picked some up that expired in May. And today was the day that we're talking about. In one day, man, you may not have to work for a month. So, a month's worth of, returns on a stock that we had been watching for months. We talked about it last week. And then with this news that came out today, man, we cleaned up on them calls. So, we kept some
Man.
runners. Got a couple of calls left for June. Got one left for September. Depending on how we go tomorrow, I do expect a little bit of a pullback tomorrow, just to see where we go with getting into more. But close to $3,000 in net returns is not a bad way
Real
to
quick.
start the week.
That's definitely not a bad day, brother. I will look. Woo! So let's jump into the article, man. I don't even want to look. Like, I'll just let y'all know. I'm still holding like 75. Shit. I'm just waiting on this thing to. Oh my god! I think I'm about the other 25 tomorrow.
But like I told KT earlier today, it looks like if you look at the chart technicals, we could hit
Yeah.
205, 210. So hey, we might
Yeah.
still have some room to
Before we
run.
get that pullback.
Get a little
All right.
pullback.
So today, and we go in. All right, so let's jump into this real quick. So Tesla jumps 15% after passing key hurdle to roll out advanced driver assistance tech in China. Shout out to CNBC for that. So what's going on is earnings were terrible for Tesla, right? They missed the beat because of so much going on, the fire in one plant, China, so much competition. But what they did was they gave everybody hope. That was the biggest piece that they did. Hope. Hold on, let me just. That always give you hope. So what they said was things may be ugly now, but we are almost at FSD. And once we get to level 5, we're gonna put these taxis out in the street. And right then, before today, it looked very good for America, but not really good because it's only America. But today, the car maker passed a significant milestone to roll out its advanced driver assistance technology in China, which is an upgrade to the autopilot driver assistant, which means you're going full self-driving in China. So it's offered FSD technology in China for years, but was restricted of that feature, and limits were set for the operations, such as the automated change lane. After this weekend, they celebrated Chinese authorities removing restrictions on all of Tesla cars and is passing the country's data security requirements. Pause. Wait a minute. That's why we fighting with TikTok. How y'all trying to check us? But it passed all the country's data security requirements. Everything is fully released. Tesla price jumps up 15% as investors reacted to the news. So don't stop there though, people. Let's see here where we at. It says FSD is an upgrade to Tesla's autopilot driver assistance. It's offered FSD technology in China for years, but restricted. Now, remember what I just told y'all? It sells level 2 driver, but remember what I said? They have just jumped. So now that they are over the hurdle, they also made an agreement with Baidu, which is another one of the car companies that's in China. So it got a mapping service license with them, which is a requirement for intelligence driving systems. So they're bringing them on board. Say, man, everything went right for Tesla in China. And if you have been following the podcast, you know that we've already said the biggest thing that's hindering Tesla is the restrictions, blah, 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 in China. Well, that's over. And so if you've seen today, like they said, 15% up for the full day. Jose just told you we didn't get the 10% pop off of earnings. But as of today, Tesla went, oh man. I was like, man, I'm trying to see where do I even. Oh my God. So it went, where did it start out at, man? Please tell me, man.
I think at one point it was up 30. So I think we had to have been at 168 at one point.
Let me stop this here.
Um,
So remove, present, stop screen. All right, here we go. I want to share this screen. So if we look at the stock for Tesla, can you see that on the screen, Jose?
Yeah.
Yeah. Tesla went $25 today. 15%. Dude, do you know how big of a move that was for people out here with shares with 0.5 deltas? Jose, man, can you, how much was your cost? How much was your cost, Jose? How much did you pay for the original price?
The original price for my calls today were $85.
And Jose, how much did you sell them for?
I sold the first one today at 900, and then I sold the second one at, I think it was 1100.
Man, I just want to say that because a lot of the times people are like, well, I don't have all this money to do this. $85. Here, and this is not your first time doing this, bro.
No.
You know, so we talking $70, $80 that we turning into like hundreds. And the thing is, so for me, I go hard, right? So the call I bought was like $2,000, right? So maybe one, I think I bought another one, and then I got stopped out of that one. Jose gonna buy cheap, but he gonna buy a bunch of them. So when it jumped, he got a lot more to hold. So me, I just hey, look, I just like to be right there. I like the intrinsic value of it for me. But so man, I guess the biggest piece, man. What do you see next for that Tesla, man?
Well, like we alluded to at the beginning, I do, because 15%, $25 at one point, we almost hit 200 today. I see momentum continuing, but I also see you'll probably have a pre-market sell-off, which will bleed into the market. But I do think at some point tomorrow will be an opportunity to do a short-term call, because I think that, if you did a month out, you could capitalize on some gains that we could see all the way up to 210, in my opinion. I think that there was a lot of factors that were bad. And then like you said, you had bad earnings. So the stock was really, really, from a technical standpoint, it was really, really beaten up. And then we had, mentioned that all of that factors into the fact that your market is down. The market needs a reason to start to become greedy again. Like we've been saying, things happen in the market that you, for lack of a better word, something always manipulates what happens. And when something like that happens to the market, happened to Tesla, look what happened to Microsoft. Microsoft ran last week based on how it was beat up technically, and it's still beat
Yep.
up. It was down again today, and we'll go into that later when we talk about some hits that we're looking at for next week or for this week.
Yeah.
But yeah, I think we can see 210, but I do think we see a little bit of a pullback first. But yeah, you got those calls waiting.
Hey, look, man. All right, y'all. So that'll be it for the news for today. What we'll do, let's get into some heat, man. Let's check this. Let's do a little heat check, man. All right, y'all. So in the heat check, we will go in. We'll take a look at our fear and greed index. We'll take a look at our heat map. I want to show you. So not only Tesla, but what else in the market today was going up. Also, what was going down, right? Because those where our opportunities may lie. We want to look for things on sale, and so our heat map is something like that that helps us. Next thing we'll look at big week again. Whenever we got earnings of this magnitude, where we have market makers count, we always kind of want to know what's going on, especially if you have a diversified portfolio, because you want to be ready, right? And if because I remember it was one time Oxy like they went through a roof. I said, "Oh my God, what happened?" And that because I was not aware. So that was a lesson for me. And we'll look at our VIX, right? We've been looking at the VIX rise up. So after the market is doing pretty good today, let's see where it's at. So first one we'll start with is the heat map, man.
Mm.
Oh my God. Hold on. Well, let me see it. Is my screen together?
Mhm.
Oh, yeah, I can see that. Okay, man. What you thinking, Jose?
Well, I'm just going to go ahead and start off by saying I picked up some Microsoft and Google today. Picked up some, picked up some Microsoft calls for June and May, and I picked up some Google calls for June and May. Now I splurged a little bit today on Microsoft, and I hit them up for
Yeah.
about $100 each. But that's what I see.
Hey, look, y'all. Look, so now if you're looking at what's happening, we see a lot of green in our sectors, but right here, when we look at our big boys, Microsoft, Google, and Meta, this is it's a good thing, but it's also a little scary, right? Because you're saying, why are the big boys having such a struggle over here? Like, is everybody leaving out of tech and they moving to different places? Or also FOMC this week, so that could be why they're pulling out. Because I will tell you, when rates get crazy and treasuries get too much, people run to tech because that's what the world is doing. So it could be people kind of pulling, letting it drop a little and get ready. But anyway, something is fishy if you see all this going on over here. Let's see. Looking at Tesla, 15%. Let's see what else we got that kind of hit some high notes today. What is
I
this
think
right here?
Apple got an upgrade today, which I think that's why it ran today.
Okay. May 2nd. We talked about that. Oof. So look at up here. This is where we at December. This is where we at 173. Looks like a buying opportunity to me.
Mm-hmm.
All right. So now, man, let's get into that thing. Let's see. Let's go back. All right. Any other sectors that really did their thing today? Who we got right here? GE. So GE been kind of going crazy, man, ever since the split. Did you ever get into any of that?
No, I missed it.
Yeah. And that's the thing about it. All right. So when we look at our earnings, we're looking at AMD. So we can see April 30th. My God. So they will be out tomorrow after hours. The biggest thing we're looking at is AMD was here in October, about $96. They went all the way up to 211, and now they're back 160. So the question is, do we get back here, or are we coming back here? Like down up in here somewhere. So that's what we're gonna look at. But we don't play earnings. But just know that is on the horizon, right? So those good places you can look at because if it's going up, then next day you want to get in and react to it. If it's going down, same thing. Let's see what else we got, brother. I think that's pretty much it, man, for our heaters. Amazon tomorrow after hours. This is another one. You look at Amazon October 119. Where's Amazon now? 180. Before this stock split, Amazon was about $2,200 a share. And
Yeah.
so now you just look, man. You say, where did it start? And this is where those stocks start out at. But if you look over time, if you put your money here in October 23 and you just let it sit, even if you didn't buy anything, you spent what is that? You spent $1,100 right here and you just let it sit. That money at one point became almost $1,900. And that was from October to April. So just another way we're looking. All right, man, let's get out of this. Let's go next and look at a little bit of the, let's see here, fear and greed, man. Fear and greed. Man, break this one down for us, man.
So we're still a little fearful right now, but if you definitely been watching the past couple of podcasts, we were borderline extreme fear at around 25, 26. It's kind of worked its way back, to the 30s and the 40s. But for a long time, as you can see on the month, and the 1 year, we were at some greed. So we've taken a tumble back. We're working our way back toward the greed. Like I said, I think there's a saying, as we keep on going to this, it's May. There's a saying, I don't know if you heard it, KT, sell in May and walk away.
Sell it, man. Look, I feel like it.
And so that's almost true if you look at it, because we're at the neutral. And as we go through, maybe tomorrow, this week, maybe even halfway through May, we might get back on the greed side. So, there might be some truth to, sell in May and walk away. Because sometimes, a lot of people say that you want to get into the market summertime, July, August. So we could see a little bit of a downturn as we get through this neutral, as we work our way back to the greed. But
Yeah.
the market for so long was greed, borderline extreme greed, that we needed the pullbacks that we've had for about 2 weeks now, 3 weeks. And so it's always healthy to do a pullback, and you don't want to go back up too fast because then that gives sellers an opportunity to start dumping, and you're going to get caught, especially when you're doing with options, and that volatility will always get you depending on how far out those calls are.
Yeah. And what I like to always tell people, and I say it each week, this is when everything is on sale, right? When others are fearful, you want to be looking at good companies like your Apples, like we just looked at Amazon. I guarantee you, Amazon was 119 over here. It became 180 when it was over here, and then we got a pullback on it, right? When we got back to here. So you want to look at your good company, start buying. This is when you really gonna spend. Right here, you may see it's moving up a little, so you might add a little to it. Right here, once we get over to this 50, we in a holding pattern, right? Because now we want to see what's going to happen. Will the market go back to fear, or will we kind of keep going up? If we keep going up, then that's when you kind of want to say, okay, people starting to get greedy. And what's going to happen? At one point, those institutions are going to, because institutions bought over here. They're the ones who started making it move this way because we can't do it. So now that they're moving everything back to neutral, we come here, we come to this greed where we were 1 year ago, where we were 1 month ago. Uncle Jerome comes out like he'll do this week, says something crazy, no rate cuts, anything of that nature, raising rates, boom, we go back to extreme fear, everybody sells off, and you left holding the bag. So this is why we like to use this chart, because it kind of gives us that market sentiment, like what's going on in the market, what should I be doing with my money? And so right now it's telling us you can buy just a little bit more, but when we get here, kind of hold off, see where we're going before you jump back in the game. All right. Let's see. Next one that we have. Hold up, man. We'll be dropping the jewel. Another jewel drop. Yeah. All right. Let's go to our VIX. My God. Look at that VIX, man. So for this one, this is our volatility index. This is saying how much will my money go up and down while it's in the stock market. And so if we can look and see over time, hold on, wait a minute, man. I can't even do it right here. Well, we got over time, our VIX $15, right? $20 is steady bouncing on us. The biggest thing I would say about VIX, look at this spike we had right here. As long as the VIX is low, that means people aren't too afraid of putting that money out there. So if you look at that fear, right? We were extreme fear. That's when, if you look at the show maybe last week, man, it maybe was like what 18, 19. It was heading to 20 on the VIX.
Mm-hmm.
So get up to that way. That's when everything is moving up and down. It is very scary in these streets. But if we look at this 14, we can see everything is kind of calming down, right? We were all the way up to a 15, and then what happened? Kind of people start settling down, kind of seeing, but this could change because this was only one day, right? Look at our 5-day. I told you last week, if you look, we were up 16. So we were rolling last week. We got all the way up to 1720, 1737. It was very scary last week, and that's when we were in extreme fear. So put together your heat map, put together your VIX, we just showed you how, and also put together your fear and greed index. All of those pieces give you a market sentiment and kind of tell you, okay, should I be aggressive? Should I not be aggressive? Anything before we wrap that segment up, Jose?
No, I just think you got to be careful with when it starts to linger. You don't, anytime something goes up too fast or goes down too fast, it's always something to watch out for. You either want a steady decrease over time or a steady increase over time, because anytime something happens too fast, you're always going to have to be ready for what the opposite of that. And so as you look at the fear and greed, as you look at the VIX, anytime your market becomes a shooting rocket, you have to always be cognizant that what goes up does come down and what goes down will come up. So, in an ideal, perfect world, the market is steady with our peaks and valleys to be able to take profits and trim and add to positions as you can. Anytime that you linger in the downtrend or you linger in an uptrend, it becomes problematic. However, those are also healthy considering time frames of being fearful, being greedy. And so you have to know or understand that what drives the market, everything around us drives the market. There could be news tomorrow that we're running out of water on Earth, and all of a sudden we're gonna it's
crash.
Fake news or not, you have to be cognizant of all the things that happen in the world that make us want or not want to buy.
Most definitely, man. All right, y'all. That was our heat check. A lot of good things that's in that segment. Go back, look at those tools, kind of research how to use those tools. But remember, those are not the only tools that we use. But when you get ready to do that research because you care about where your money gonna go and you care about losing it, then you spend extra time looking at those pieces. And so thankfully, we get to do that when we're here, which kind of gives us an idea of what we're looking for the rest of. Hey, bro, this really was very slick, bro. We do a lot of research, bro, to help us learn a lot. So we shouting out. All right, so now when we get back, we are going to go trading with Jose. Get your pen, your paper. We got another candlestick to look for today. And remember, whether it's bullish or bearish, the money is in those candlesticks. Keep it locked. We'll be right back. Trading with Jose. Let's do it. Man, I wonder if I'm gonna get a copyright strike for that, man. We probably going down, but it's all right. Hey, look, welcome back to the Administrative Podcast, man. We have already been through our news. Tesla went crazy today. If you weren't in, hey, man, I'm sorry. It's just very bad for you, man. Like, gosh, hold up, bro. Oh, but for everybody that's been rocking with us and you was in that Tesla, you get these. Woo! All right, so Tesla went crazy today. Heat check. Remember what we said. Right now, we're coming to the end of fear. So extreme fear, you want to be looking to see what's on sale, get you some quality. Fear, you want to add a little bit more to it. Neutral, you want to be holding, because when we go to greed, extreme greed, people is unloading, right? And so you want to make sure that you bought when it was low so you could sell when it's high. Go back, check those segments. But right now, we've been going through. Jose, I'm gonna let you talk about it, man. Welcome to the game, man.
We're to go back to what KT was saying. You know, we've been talking a lot about a lot of stuff, but go back to some of our podcasts where we actually talked about options. We talked about calls, puts, what that meant, broke it down for y'all. You know, try to get into some, trading options. They'll save you some money in the long run off of buying, traditional shares. So please go back and do that, because as we continue to move forward, we're going to continue to drop, some calls here and there. Hopefully the idea is to be able to do that and kind of like go back and talk about what our trading experience was like. So please make sure you set up those accounts and learn, or go back and watch those videos. So now let's talk about our momentum going forward with our candlesticks. As always, we're going to do a quick little review in understanding these candlestick patterns. It is a price chart. It's a movement on a chart with given time frames. You can look. Each candlestick is going to have different time frames to look at. We have the open, the close, the high, and the low are all parts of the candlestick. We have the body. We have those wicks, and we have those shadows. There's a nice little picture of what we've been talking about. A green candle is bullish, and a red candle is bearish. And so as we continue to move forward, our first bullish candle that we talked about was the hammer. The hammer candlestick signifies a reversal from a downtrend, and it looks like a hammer. And so there you go. Our next one, we had the morning star, kind of like if you think about a W or, a U that's going up. We have the red candle coming from a downtrend, and now we're starting to reverse out. Our next one that we had was the bullish engulfing, where the big news or the big idea takeaway is that the green candle engulfs the previous red or bearish candle. All right, so then we went into our the bullish reversal of a inside up. It's a turnaround. Downtrend was happening. We have one red candle followed by a medium, and then we had a longer candle at the end that signified that we're moving out of that downtrend. Then we went into our bearish candlesticks, and this was perfect timing based on what we had witnessed in the market as we were going through. And our first one was the evening star, opposite of the morning star. And so we are coming from a bullish to a bearish. You can see the big red candle at the end, and it signifies the end of an uptrend. So then we had our shooting star, and we had where our shooting star, it's kind of like a hammer, but it's reversed, where the wick is actually long. But if you think about, there's one other pattern though that's called a reverse hammer. So that's why we really don't want to call this one a hammer that's upside down, because there is a reverse hammer that kind of similar to this shooting star. So now our next pattern that we're going to talk about today is
Hey,
our bearish engulfing. Wow. So we had a bullish engulfing. Now we got a bearish engulfing. So a lot of these patterns mirror each other. So we're coming from a, uptrend. And so with the bearish engulfing, now we're going to start a downtrend. And yes, it is exactly like, the first one where your candle engulfs the bullish candle. So as you can see, your candle here, the red one is bigger than your green one. So as we move on, what does it look like? Well, the first candle is bullish. Like I said, it's signaling the continuation of the uptrend. Um, but as we start to sell off and those sellers are coming in stronger, the second candle opens higher than the close of the first candle. So if you can see the bottom or the top of that candle, that's where it opened because now it's red. So we're going to close at the bottom. So it's lower than the first. So as you can see, that closing of that candle, depending on your time frame, is bigger and longer than the close or the open on the bullish candle. And like with the bullish engulfing, the bearish engulfing, it engulfs or it's bigger, probably twice as big as the bullish candle. So now let's take a look at it when it comes to what it actually. Here's a little recap of what we just talked about. The bearish candle opens at or above the previous candle's close. The length of the bearish candle engulfs the previous green candle, and the bearish candle closes below the previous candle's open. As you can see, there's the open and close on the bullish candle. Remember, on a bullish candle, the open is at the bottom and it closes up. And remember that on a bearish candle, we open at the top and we go down. So based on your
mm,
time frames, they fill up. Here we go again with the bullish and the bearish. You can see that they're the same, except the colors are flipped. And so keep in mind that a bullish and a bearish engulfing will look the same. So now
man.
we to the chart, you see the uptrend followed by the downtrend or a reversal, and it starts with that bearish engulfing pattern there in the middle. And then I think this is our last picture here, where you have on the chart itself. Next picture, KT. Yeah. So
Sorry,
here
man.
we go. As you can see on this chart, we were having a bullish uptrend, and then bam, you hit it with the big bearish engulfing candle. Now remember the last time we talked about that where you still see two green candles. However, they're now followed by red. So you might see a green candle in between there, but if you can spot that bearish engulfing, and then you just know that don't get caught up in that head fake,
Woo.
because a lot of times we get caught in that shakeout breakout. That could be the wrong.
Right here. You thought I was going back up. They got you.
Got them. And
Got
so
you. They got you.
on
Oh
that
man, they know
time
they
frame
get you
that
right
you're
there.
looking at, you got to tell which candlestick pattern that you're looking at. So as we've said before in the previous ones, traders use all these candlesticks to to talk about trends, reversals, market sentiment, and every person that we've talked to, all the groups that we're in, everybody talks about price. Everybody talks about price movement, price action. These candlesticks are what actually gear your movement of your prices. So um, sellers, buyers, they come together, and there you go. Um,
That's it.
you got bullish and you got bearish reversals. So keep in mind when we're talking about these hammer or any type of candle. If you need to go buy this
Yes,
book,
sir.
remember charting technical analysis. Now that we've covered basic bullish and bearish candlesticks, what we're going to drop for next week, we're going to start looking at patterns. Just to give you a front load, so to speak, because we are educators. We will
Hey,
be talking A couple of patterns that we are going to be talking about will be the head, shoulder, and then we have a cup and handle pattern that we use, and then we have a bearish bull pennant. I mean, a bearish pennant or a bull pennant, and both of those can also be called a bearish flag or a bullish flag. And it's when you think about everything that I just said, you got a point, and then you got at the bottom that's your head and shoulders. Your cup and handle looks like a cup with a handle, and when you start drawing these on the map, yes, the bearish and the bullish flags look like a flag. It just you're going to either be going up or down depending on if it's bearish or bullish. So we'll start looking at those next week. Start looking at some actual stocks picks and some calls. But yes, if you followed us before, please go back and look at those options tutorials and hit us up with these candlesticks next week that we start talking about patterns.
Yeah,
because they all come together.
Week, man,
they all come together.
It's time to. I think next week, man, we need to do like a list for the week, man. I think it's time. I think they're ready, though.
Yeah.
Next week, man, we'll have a list of picks for the week, man.
Yeah.
At least maybe like 2 or 3. We don't want to overwhelm, but this will be, if you go look at these, you may get a little bit back. Just like we called that Chewy, just like we called that Tesla. Let's go. All right, Jose, man, I appreciate you for that, man. Awesome information today. Please make sure you go back, watch each episode, because these candlesticks have the power to change your life. But it's almost like in the beginning, you think about the importance of your money, losing your money, gaining your money. There's not too many places where you can literally scale your wealth, right? Mm-hmm. But if you learn how to do this trading, and once again, when I say scale the wealth, if I started at $85 and I turn that into $1,100, where else can you do that? You're not going to be able to do that on your job, right? Mm-hmm. So you got to be able to figure out how to get this going where you can know what's happening, not predict, but you can react to what's happening and build your bag. And learning more about this stuff is the way that people with all the money do it. I've seen people start an account with 500 and they end with 10,000, 12,000, right? So just a year. So it is possible, man. So big shouts out to you, Jose. We're looking forward to the candlestick patterns for next week, especially the cup and handle, man. I want to know more about this. Yeah. What we'll do, let's take a quick break. When we get back, we'll go into our platform probing. Let's look a deeper look at Apple's earnings. Let's see what they have for us. We'll talk about that because we don't plan on earnings, but we want to be better prepared so we can know that next morning what we're going to do with the bag. We'll be right back. All right, platform probing. Let's go. All right, y'all. So, hey, look, man, I'm taking slow motion. Apple. So we looked at the chart. We looked at our heat map. We know a little bit about Apple, and we know that they will release earnings. Man, what day was that?
I think it's in 2
April 30th. Tomorrow. Yeah. No, maybe Thursday, right? May 2nd.
Yeah.
So Apple will be releasing earnings in May 2nd. So I will say this speech right here. People say the stock market is like gambling. If you do your technical analysis, if you do your research on that stock, you don't know which way to go. But if you look at history, look at all these pieces, you almost can say it's a higher risk to reward saying it'll go this way. When you buy a call or anything before earnings, you have no longer put any of those pieces of technical analysis that gives you an advantage into play. You now leave your money up to chance. Prime example, Tesla got killed on earnings. They missed. It was terrible. But they gave people hope, right? And so that what happens is the call came out, people had a conversation, they heard what they had for the future, boom, they went through the roof. That don't happen all the time, people. I took Lulu. I said, I love Lulu. These are some expensive ass yoga pants. Got the yoga pants stock, played earnings. I was going up. My plan was, I said, man, I'm gonna ride this thing up to earnings because I believe everybody think they're gonna do good. And what happened? I gambled. I said, man, they gonna do good at earnings. Boom. Next day I'm down $500. Everything I worked for was gone. It's just sitting there right now because it's such a long day to call. Hopefully it'll come back, but it probably won't. So what we're saying is before we get started with talking about these earnings, do not play earnings, right? Because you never know where it's gonna go. What we teach you is the technical analysis to be able to look at the stock survey, seeing where it could go, and the next morning be ready to react to that stock. Totally two different things. So, all right, I'll get off that soapbox, man. Now let's look a little bit of what I was thinking about today. I said, okay, I want to be able to kind of look at Apple, kind of go over things, to kind of help everybody see how do we prepare for earnings. And so that's what we'll do in our platform probing. So when you think about Apple over the past few quarters, it has consistently delivered impressive earning results, right? We'll go through and we'll look at them. Strong revenue growth, robust sales of your iPhones, iPads. We all know they just came out with the glasses. So each time they've surpassed analysts' expectations, time and time again, right? So we know that they are resilient. We know that they have the ability to innovate in this market. The piece that we always talk about is the key factors of what happens in their forecast. So remember what I said, they may beat the mark, but on that conference call, they tell people, well, the demand for the iPhone is as big as we thought it was. China has did so many restrictions that people are not really buying all the phones. So all of these is what could go into that call, right? And so as they are looking at that, what we'll do today is kind of break down some of the analyst thoughts and we'll go through. So let's look at our first article. It says, let's go. Who is this? Zach's Yahoo Finance. Expected to beat earnings estimates or should you buy? Remember what we just said? No, you should not buy. It's too close to earnings. Wall Street expects a year-over-year decline in earnings on lower revenues, which Apple reports the quarter that ended March 2024. So the earnings report, which is expected to be released May 2nd, might help the stock move higher if the key numbers are better than expectations. On the other hand, they may move lower. And this is what the consensus estimate is. The maker of iPhones, iPads, and other products is expected to post quarterly earnings of $1.51 per share in its upcoming report, which represents a year-over-year change of 0.7% of that company. If you don't think that's a lot, we're talking a $2 trillion market cap. This is how big that is. Revenues are expected to be down 89. Oh, it's supposed to be 89.99 billion, and that is down 5.1% from the year ago quarter. First off, let's talk about making $89 billion in 3 months. That's the first thing, right? But the second part is down 5.1%, right? And so we never know what could happen. Jose, anything you got to say on the earnings?
Well, I think to go back to what you were saying about earnings being, a difficult thing, I think that sometimes we go through and we have product or we have calls, options, we have shares of stocks that we are holding, and then earnings do come. Sometimes you get you get lucky. Sometimes you don't. I would advise you never take anything the day before earnings to gamble with, unless you throw some $30 lotto out there to where you're picking up a call that costs you under 50. I mean, but you don't know, because you could have great earnings and then you could easily just lay an egg. Um,
Yeah.
I think one of the things that KT is going to talk about um, here in platform probing that has me optimistic is the fact that a while back Apple was a $200 stock.
Yep.
We are down to 173 from being up around $200. So in my mind, just like when we talked about that Tesla stock, they could have bad earnings, but because they've been beaten up so much, who knows what Apple
Yeah.
could end up doing after earnings. So, all right, KT, take it away.
Yes, sir. And so as we get ready to look at tonight, what are some of the things that we'll look at in Trade and View as we prepare for Apple's earnings? And I'll kind of give you a list of those things. We are at 50 minutes, so I may have break down a little bit of this list and then make another video for the rest if we feel like it's important. So I hit the first ones. So the biggest thing that we want to look at is the price action. So that's what we want to look at, right? So what has the price been doing over the last few weeks, months, right? And so we look at Apple. Remember what Jose said? I will come back out. Let's look at this full screen. So let's look at Apple on the 1 month chart. So if we go here and we look at Apple and we come back over to, let's see, let's get back into this year right here. So we come into January 23rd. Apple, where's Apple? 133.
Mm.
130. My God, what are we doing here, man? Look at this. So we steady jumping up. We 154. Here we go. 169. We 170. 170. We 180. Look at this. Look at this, people. This is only a few months right here, right? And so, like I said, this is what you think about when you give us that hope, because we know that this can happen. Now, over the last few months, you think about August, September, it was rough. November kind of showed out. And so now here we're going. We get into this year, January. We're 188. We're coming back down. We're coming down on our incline. Our decline. Right now, 175, 171. So they have been losing a lot, but this tells us that we got a nice little range that could bounce. So this thing could take us back down to where? No, not 129. God, I hope we don't get back there. But it could take us all the way back down to 163, right? 163. Definitely take us back down to 169 real fast. And depending on how bad it goes, though, we could get back down to about 146. But at the other end, we could start getting back up and we can get closer here. A lot of stocks that have been breaking out after hours for earnings, they've been pushing at least a good $20, right? So let's say we do push that $20, then we'll get back to these highs. As we see, this is a level of resistance, so it could get rough. Even if we get a 189, right? So all of these are just pieces where we're looking at when we're saying, okay, what has the price been doing? Not making any predictions, but I want to kind of see some points of resistance, which is at the top. So we'll see over here 196. And what were some points of support? So 170, right? So that's our range. Next thing we want to look at is the volume. So now we can say, okay, I see the price action. I see where this thing could go, kind of looking at my range. Now let's see how many people been coming into the stock as this is earnings week. We're 2 days out from earnings, or more people interested in this stock, or more people kind of pushing away from it. So we come down over here. Our volume just today was 68 million people, right? 68 million people. What is our usual volume? 59 million people. So by then, it tells me, okay, I'm looking at the price. We're a little green over here. Now I'm coming up and I was looking at 68 million people came in today. That means something is about to happen. We don't know what yet, but this telling us, wait, okay, this we got some things picking up. Now we talked about our estimates. So now let's look at kind of what's going on with that. Where has earnings been? remember what we said for the last few earnings, they've been beaten, right? So estimate 143, 152, estimate 120, they 126, 139, 146, 210, 218. But they're coming over here, and this will be $1.50. They said $1.51. It was the estimating. Big times, 9 times out of 10, they will beat. But the question is, what are we saying is going to be the income or the revenue forecast? Once again, we beat every year, but look at the stock, right? If we were beaten and it was that important, would we really have been declining like we were this year? This has been rough on Apple, but things could be changing, man. Anything on that so far, Jose?
I just think, when I was looking at the year to date, we're down $13 year to date. So we ran hard a little bit today. If you look at what we actually were up today, Apple did have some news. Let me see here. We're moving higher based on an upgrade. Um, it's kind of hard to say when a stock runs into earnings, gives people the opportunity to, for whatever the reason, sell. So you got to keep an eye on that tomorrow. Difference between Apple and Tesla, when Tesla was continuously getting beat up, even the day of earnings or the day before, but Apple ran today, a nice little $7 jump, I believe. It's a $6 jump. So think about thinking about that price action going into earnings. It's, like KT said, it's usually someone saying something or they know something. So we could see some downturn after earnings are released for Apple, no matter how good or bad they might be. But keep in mind too that Tesla had bad earnings and they skyrocketed a little bit.
Girl, you knocked me out.
But overall,
now this is our last one. We got about we got about 3 minutes left. So this is the last one I want to get into before I close us out. Our trend, right? What is the trend saying? Is Tesla in a uptrend? I mean, not Tesla, is Apple in a uptrend or is it in a downtrend? And so when I go to my 4-hour chart, remember what Jose talked about, the candlestick. So this means what is Tesla price doing every 4 hours? And so see if we can put it into a big scope of things. It was down here, but now we're going. And it's taking 4 hours for these candlesticks to close. So that really gives you a good idea of what are people doing. So as we close today, this one here kind of tells us we're still a little bit indecisive on what happened, but it was pretty much the same. Weeks almost the same. All right, let's go down to our 1 hour chart. This will give us also what's happening. Once again, our EMA still tell us that Tesla is still in an uptrend. Nothing is going bad. So, but look at this. We still got a little decline, but it met us right here at the EMA and it bounced off. So we'll see what happens. Now let's go down to a little bit stickier time frame, our 15. So we get to our lower time frames. What's happening? We're starting to see a downtrend now, right? Because our red line is crossing over the blue. And we know when that blue is up, we get that money. But when things start to switch, so that tells us overall, the big money is still hanging out, heading up. But the day-to-day and what's happening on the effect of getting closer to earnings, people are starting to turn aside. So when we look at this, we want to make sure, when I say I'm going to buy a stock, the first thing I do is I go back up to the higher time frame and I want to make sure that all of them match. So we can look right now, we know that something is going on because our time frames are starting not to match each other, right? So that gives us a little bit of tale of caution as we prepare for earnings. Man, Jose, we might have to extend, man. We shoot. So now with that tells me now, let's go back out 5 minutes. What's happening on the 5 minutes? The 5 minute has been in a downtrend, right? So that tells me something is getting ready to happen on those higher chart frames. Somebody is about to win this battle, and it looks like the sellers are about to start winning, right? But we did have a run up today. for the upgrade. So, and people are, once again, a lot of people keep that same sentiment. We don't gamble on earnings. So it could be a sell-off only for them to come back in and move that thing right at the end. All right. So now look at what it's telling us. Big downtrend right here. But look what's happening. On the 1 minute time frame, they could be coming back up because our EMAs are starting to curl up. Hey, there we go, man. Hey, for real, huh, man? There go there. Hey, that's your cup. That's your handle, which usually signifies a move to the upside. Come on, man. All right, so Jose, I think we're gonna stop right there, man, because we already passed the hour. Good information today. I hope you all were able to catch a little bit of that for the Apple. Sorry we ran out of time. In the words of Jimmy Kimmel, goddamn Matt Damon, we couldn't get to you this week. Hold up, bro. Jose, anything before we close out?
Just keep an eye on that Apple, man. I think I have a feeling we're gonna be talking about it next week. I just anticipate with the way it's been, on a 3-month, your RSI is around 40. So your MACD's crossing on a 3-month chart. The only skeptical part that I see is also on the 3-month chart, we are approaching a triple top at 176. Ooh. So if we do make a move tomorrow, we might come down at around 176. But still, on a 5-day, 39.5 RSI is almost extremely oversold. So, and that's even with the run up today. So keep that in mind.
Keep that in mind. All right. That'll do it for y'all. Hey, that will do it, man. I want to say thank you, Jose, for continuing to show up, man. Drop that good knowledge on us about these candlesticks. Thank everybody that tuned in. If you have not, make sure you subscribe to the channel. Please like, share, comment. And also, less talking, more action. We out here, we dropping these jewels every week, but we not saying it for us. Like we make some money. We make it. But we said it's important for us to bring everybody in because I know a lot of educators out there like their side hustle. And so how do we win is we don't trade our time for money. So we can figure out how to jump in and out these plays and you can be able to do your job, keep on going with your life. And then you get a notification that it's sold and you got that bag. That's it, man. This is KT for KTTV signing out. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.